Welcome back to the Sovereign Ratio. Today we're going to do part 4 in our TA 101 series, and today we're going to take a look at Bitcoin pairings and aggregates. Before we get started though, I do have a bone to pick with y'all. When I decided to do this video, I was sitting right around 500 subscribers, and I wanted to thank all of you for that, but you guys just decided to take it up another level and just completely ruin my fun and shoot it up to 550 in the matter of 24 hours. So it's not actually a bone. I want to say thank you for that. I appreciate it, and I was not expecting a 10% growth on the channel in a single 24-hour period. And in fact, since I'm recording this video over a period of 2 days, you guys kicked it up an even bigger notch, and now we're at 596. So let's get 4 more, get to 600, and thanks again. If you're new here, please hit the subscribe button, the like button, leave me a comment below. Back to our regularly scheduled program. Today we're going to look at pairings. The first one I have pulled up here for an example is called ETH-BTC. Essentially what it is a tool for you to use to compare an asset versus Bitcoin instead of comparing an asset against a dollar. Because oftentimes those charts are going to look very different depending on the circumstances of Bitcoin's price action. These charts also have indicators that can be used just like any other chart does, and oftentimes those indicators work in a similar way to what they would on just a straight asset. So this particular one, ETH-BTC, you can see we can scroll out on this 1 week chart and look all the way back to where data first began, and that is where ETH data started. So that's as far back as it goes, which is September 2017, at least on KuCoin. We are on a KuCoin chart here, just for context. But there are some really cool things that you can glean from ETH-BTC. For one, ETH-BTC is very highly correlated to the altcoin market, and fluctuations in ETH-BTC are not a direct result or directly cause fluctuations in the altcoin market, but oftentimes they're so closely related that it's a very worthwhile chart to pull up from time to time and kind of gauge where things are going. So just as an example here, this is not going to be a video completely about ETH-BTC, but if we look at some dates here, some key important dates, let's take some peaks right here. You can see this peak happened in December of 2021, and you can see this peak happened in May of 2021. Well, what else happened on those times? Those were both the peaks of the last bull cycle. So as ETH-BTC goes up, we can find correlation with alts going up as well. Obviously, Bitcoin's going up too in a bull market, but it's not going up nearly as aggressively as some of the altcoins are. Whereas Bitcoin might do a 3, 4, 5x or whatever, altcoins are doing 20, 30, 40, 50x on some of them. And this chart, while this does not include altcoins, it does give us somewhat of a representation of when it's a good time to buy or when it's a good time to sell an altcoin, along with other aggregated charts that we're going to look at shortly. Now, a lot of these charts are just directly in TradingView. It doesn't require any calculations on your part or putting formulas in. You just go up to the top left like we would look for any other asset that we looked at in previous videos, how to do that. Just click on it, type ETH-BTC, and it pops right up. Now, if I wanted to look at something else, if I wanted to look at Litecoin BTC, I can do that right here. You can see Binance has a published chart for that. Bitstamp does, Gemini, Coinbase, they all have published charts for that. And most of the major coins are going to have that. We can also type something like Matic BTC, and you can see that is available on Binance, Coinbase, Bitfinex, so on and so forth. Let's just pull up the Binance one real quick. And you can see that this chart actually looks quite different from its USD valuation. Let's go ahead and pull that up too, just so we can kind of know what we're looking at. Just go back to the top bar and type Matic again, USD, add that in. And now we have 2 charts, one versus the Bitcoin price, one versus the US dollar. You can see that against Bitcoin, Matic has not been doing well whatsoever. But against the dollar, it's been holding up a little bit better. It's actually broken this long-term trend, which again, I'm not a huge fan of diagonal trends, but it is there. It's something to go off of. While we would expect Matic to come back down and retest this trend line, which would oddly enough would put it probably somewhere around the 50-cent mark based off of its previous low, the BTC pairing is much different. Whereas we have like this diagonal trend here, you can see that we have a flat trend right here. It's almost like a giant flag, to be honest. I'm just looking at this for the first time, doing it as we make the video. This looks like the range that it kind of wants to be in. To me, this is the bottom of the range, and Matic is getting pretty close to the bottom of its BTC pairing. If it were to fall below this trend line for whatever reason, I would expect something to hold right here. So, I mean, that's totally feasible too, that it could come back down and do that. but that's just another way that you can use Bitcoin pairing versus a USD pairing to kind of do trades and stuff. Now, we're not going to go too deep into that because, again, this is a 101 video. This is not something that we're getting really detailed and trying to analyze this right here, right now. But this is, for example, how you can use pairings alongside each other to kind of determine how you want to trade. All right, so now we're going to look at aggregates. An example of an aggregate is called total. There's total, which is all cryptocurrency combined. There's total 2, which is what we have pulled up here on the chart now, which is everything except Bitcoin. And then we have total 3, which is everything except Bitcoin and Ethereum. One of my favorites happens to be total 3, which you can get by actually just clicking up here and looking like you would for any other asset. Just type total, total 2, or total 3. I already have it saved over here, so I'm going to pull it up right now. Total 3, again, is a representation of all crypto except Bitcoin and Ethereum. And it also serves as a good general indicator of times to get in altcoins and times to get out altcoins. You can also use other things like the ETH BTC pair, combined with total 3, combined with some other more detailed and difficult charts to create, which I'll show you momentarily. But right now, we're looking at total 3. You can see I've got gold lines drawn for the halvings, just so I have a point of reference for that. And you can also draw trend lines on the total charts, just like you can any other crypto. So you can see 3 trends right here. This one is not necessarily a trend yet, unless you consider back here. But the reason that I have it is so I can judge if crypto is going to go past this pivot point right here. And you can see that it did, but actually came right back below the trend line. So that tells me there's some weakness in the altcoin market right now. And in fact, at this point in time, which is February 1st, 2024, there is a lot of weakness because Bitcoin's starting to downturn, which I think is going to end up in the 30 to 32K range. But in the meantime, we're not here to talk about that. And you can see another diagonal trend line here, which served as resistance for a while and broke out, but there was never a retest. So I wouldn't be surprised at all to see come down and retest this at some point before the bull market actually starts. And that line actually works out pretty well because that would be right before the halving. It could be like that. It could do something like that where it actually touches down here before the halving. And if we pull up the total and total 3 charts side by side and run price ranges, you can see that total is significantly stronger throughout this bear market than total 3 has been. Total actually has gone up 146% since the bear market bottom, while total 3 has only gone up 84.51% since the bottom. Reason for that? Bitcoin has been very strong in the movement up to the 618 golden rejection, and during that time, altcoins as a total market cap simply didn't run as much as Bitcoin did. That's why total looks so much better than total 3. While you can see back in the previous bull run, total had a $3 trillion valuation. Altcoins in total 3 had a $1.1 trillion valuation. Additionally, the indicators also work on totals. On the bottom, you can see stochastic peaks along with price peaks, and you can see stochastic bottoms with price bottoms. You can also create custom formulas with total. For example, right here, I have total 3 minus Solana. Why do I have that? I think Solana is going to be the next blue chip in crypto. I think it's going to take the 3rd position. Because of that, I think we need a total 4. And this is basically what total 4 would be if it existed, is total 3 minus Solana. And interesting thing about it is when I created this, I was looking for rejections, like I was looking on the total 3 chart. And you can see on total 3, we looked before where it popped above the line a little bit and then came back into it. But the interesting thing is that total 3 minus Solana actually came and tapped right on that line, but never had a single close above it. So that tells me that it is a viable indicator, at least for the purposes that I'm using it for, which is looking for entries for altcoins that aren't one of those 3. You can create indicators like this by just typing up here and typing total 3 minus Sol. Hit enter, and it pops right up. One other thing that you can see on the right-hand side of the screen there is a category for market monitoring symbols. For me, that's where I keep things like this, along with some other ones that I haven't mentioned yet. There's Bitcoin dominance, Bitcoin futures, 4 different Bitcoin charts, Ethereum dominance, gold, the SPX, USDC dominance, USDT dominance, a lot of other ones. One I want to pull up right now is the DXY, which is the dollar currency index. This is one that I think everybody should get used to, which is current world reserve currency. I think it's important to have that in your trading arsenal as well, because typically crypto and the dollar fight each other. One goes one way, the other goes the other way, but that's not necessarily always the case. It's not a 100% correlation, but the dollar can help you judge entries and exits for swing trades or even really long-term trading. I don't necessarily think the dollar is a fantastic tool for short-term trading, but if you're looking at the big picture like this and using trend lines and even using indicators, like using the stochastic on the dollar works too. Those kind of things can help plan long-term trades. For example, right now, if I look at this, I've got this trend line that I've established here. It's a little bit off, so I'm going to fix it. That looks a lot better. And you can see it recently bounced off of that trend line. Now it could come back and test it again, but for me, that is a healthy bounce off of the trend line, and I could see the dollar going up, which further supports my thesis that things are going to go down at the time of this video is recording. So hopefully you learned something today about Bitcoin or Ethereum pairings and aggregates, and how you can use those for short and long-term trading, and to time your entries and exits into the market. If you're new here, please hit the subscribe button, the like button, leave me a comment below. Thank you again for 600 subscribers. We'll see you in the next video, and safe trading.